gold has had a very strong rally, specifically in the last 3 to 4 weeks. Gold has been up, it seems like, every single day without even a normal pullback. Usually when you see gold rally, it goes up a couple percentage points and it corrects for a while. But since the start of March, we've seen gold going up relentlessly. I think we're up about 14% year to date. Now, the most likely explanation, unfortunately, if one looks at capital flows, is that gold is possibly and most likely going up because the world is building in a greater war scenario. Quite often in markets, there are individuals and groups that know what's going on, and it's quite possible that because the war in Ukraine and Russia could escalate to full-blown NATO-Russia war, that big buyers of gold are in the markets currently anticipating that. So that's the unfortunate side of gold. It is a safe haven for geopolitical events. If you look at my article that I wrote last week, and I will include a link to it so you can have another look at it, one of the things I talked about was a possible reset, meaning we could have either the markets do it or the authorities do it. So specifically, gold has gone up over 10% against the US dollar just in the last month alone. And what this effectively is a repricing of, for example, the US dollar in relation to gold. The dollar is dropping relative to real money, which is gold. So in a sense, we're getting the repricing, the restructuring where the value of the US dollar is going down. And this makes it easier in terms of government to inflate away the debt. Now, the question is the price of gold going up dramatically because of the markets doing this, or is it possible that there's other interests? We do know for the last year or so that the central banks have been major buyers of gold. The BRICS, with their attempt possibly to create a new gold-backed currency, is one explanation. Another explanation is what we saw with the Russian reserves being frozen by the U.S., that central banks need to diversify away from the U.S. dollar holdings for safety's sake in case there's more sanctions brought against other countries by having the U.S. freeze their assets. But also, when central banks buy gold, it strengthens their balance sheet. So as their paper currency goes down, the value of gold on their balance sheet goes up. So while we're not sure for the exact reason behind the move in gold, it is highly significant. We're seeing a new repricing of gold relative to paper assets. And I think what this is telling us is that gold is in the new stages, or early stages rather, of a bull market. And so we haven't done anything. We're going to be rebalancing the portfolio come June, but we're very happy to see this. The permit portfolio as of the taping today is up over 9% year to date, and gold has been a big part of it. So we expect gold to continue and this bull market to go on for years to come. But so far, the gold rally is real, and we're likely to see higher prices as the year goes on. What this means to the average investor is that within the fiat currency system, the value of your money is dropping. So what we're trying to show here is that if you own gold, gold can be a hedge against higher inflation and lower purchasing power on your currency. Now, most of the time, this isn't important. And as a result, in the textbooks and throughout the financial markets, gold is very rarely mentioned as a safe haven asset. But at certain times, it's essential, because there are times like the 1970s where we saw the value of paper money drop quite considerably because of higher inflation, and gold, which is an asset outside of our financial system, can be a beautiful hedge against the lower purchasing power of your currency.